Good afternoon, everyone, and welcome to our session on accelerating climate finance for a green recovery. This is one of the many super interesting sessions being organized as part of the Southeast Asia Development Symposium, and I'm really very glad for everybody who can join the session today. My name is Naeeda Crishna Morgado. I am an infrastructure specialist working on innovation and green finance in ADB's Southeast Asia department. And today we have a discussion on how we can mobilize climate finance to support a green recovery in the region. The Southeast Asia has been an interesting place to work on climate action in the last couple of years. The pandemic has had a deep and profound impact on the region. And in 2020, some of the momentum that was gathering pace on green finance and climate action prior to the pandemic began to falter. However, 2021, we saw countries in the region, ASEAN countries, update their NDCs, recommit to climate action. In some cases, NDCs even more ambitious or equally ambitious as they were prior to the pandemic. And in the run-up to COP26, we saw a lot of momentum again on climate action, despite the raging pandemic and crisis around us. So now we have an ambitious agenda for the region that has been clearly set by governments. But the crisis has exacerbated what was already happening in the region and frankly has severely affected the ability of the public sector, the private sector, almost anybody else to rapidly implement climate action. And rapid implementation is what we need if we're going to turn the tide in the next 8 to 10 years, which is critical. So the discussion today is really, we need recovery action now, but how do we quickly mobilize the financing that's required to unlock the projects that are needed? The session today will hopefully have some of the answers to the questions. We have with us, I would argue, some of the trend setters on different aspects of the climate finance ecosystem in the region. Certainly, they're leading on different initiatives and in their own areas of expertise, and we're really lucky to have the panel today. We're going to start with an opening presentation by Anuj Mehta, who I will introduce shortly, and then presentations on different initiatives covering both the policy and enabling frameworks aspect of climate finance, and then on initiative on financing instruments and channels. So we'll have presentations covering this round of items, and then we're going to have a panel discussion. Before we start, I think there was a poll that was put out asking you to think about what you think is the climate financing need for climate-related infrastructure in Southeast Asia. And I will be interested to see where the answers come out. I'll maybe share that with you after our next discussion. I think Anuj will already have some of the answers on his slides. So in order to start today, I'd like to introduce Anuj Mehta, who is country director for ADB's Thailand resident mission, and also the head of the ASEAN Catalytic Green Finance Facility, ACGF. So Anuj, over to you to set the stage and put us all on the same playing field in terms of this discussion, in terms of where we are on climate finance and green finance trends in the region. Thanks, Anuj.
Thank you, Naeeda. Thank you for having me at this excellent event, much needed, especially at this point in time when we are plotting the course for recovery post-COVID. I'm going to switch off my video and hopefully you can see my slides, which is the important thing. Just to set the context, sort of just some of the key facts, I think just laying them out. From all the reports we've been seeing, we are really off track in terms of our climate ambitions for the planet. And, the code red, which was coined by the UN, is super clear in the sense the world is not on track. We're aiming at probably 4.4 degrees temperature rise by 2100. And that's going to have a catastrophic impact on the planet. I think that code red has been sort of well advertised and well known. On the right-hand side, an atlas of human suffering and a damning indictment of climate leadership. I think despite what a lot of people have been doing, this is what the IPCC report has been pointing to. 50 to 75% of the global population could be exposed to life-threatening conditions. So, and this is already happening in many parts of the world. We're already seeing communities on the coast being affected by it, increasing storms, lot of impacts. Now, at the climate conference in Glasgow in November 2021, everybody reaffirmed this target. Emissions must fall 45% by 2030, net zero by 2015. Of course, a major focus on phasing out coal and fossil fuel, but also a very proactive focus on EVs, electric vehicles, zero emissions, and of course, a big focus on MDBs. To try and be the catalyst which can make a lot of climate finance flow into these areas. ADB itself, of course, at COP26 announced its renewed pledge, expanded pledge for 100 billion in cumulative climate finance by 2030 to try and support what the climate talks were talking about in COP26. Southeast Asia, where I sit right now, is even more at risk, I would say. 17 to 37%. So a huge amount of GDP loss expected in these global warming scenarios of 2 to 3.2 degrees C. It's one of the worst expected forecasts in the world. 15 of the 24 climate-linked crises are expected to be in Southeast Asia. Peatlands, I mean, it's a huge area in terms of its impact on CO2 absorption. 100% of peatlands and lots of forest cover expected to be lost. And of course, we haven't even included the impact on the oceans in Southeast Asia, another area where we're seeing a massive loss of coral reefs. And of course, as we know, oceans absorb another third of the CO2 emissions. So major issue for Southeast Asia. And given that a lot of this is well known by decision makers and by ourselves working in this area, the biggest challenge is finance. And if I look at that on the right-hand side, we need $1.7 trillion per year since 2016 for meeting these climate resilient infrastructure needs that would actually plug some of the adaptation and mitigation requirements in Asia. But of that, we already have a gap of some 459 billion per year before COVID. And that gap is probably only worsened with COVID in the ability of the public sector to finance a large part of these projects. And so the single biggest point over here is massive financing gap from private and public sector to be able to meet all the necessary infrastructure, whether in peatlands or oceans or on mitigation or adaptation related infrastructure projects. Now, the challenge is therefore how do we mobilize the private capital? And there is obviously, it's well known, pension funds, commercial banks through the capital markets have a ton of money available for financing climate resilient infrastructure, but the flows are not happening at the scale required. Whether it's because of the perceived risk in projects or just a lack of projects, in terms of the global pools of capital flowing, but also domestically, the revenue mobilization in our countries is not at the same level as many of the high income countries, and therefore it again limits how much public money is available. So you're stuck in a double whammy, low amount of public funds available, low flow of private capital from the global pools. And how do you make that happen? This is the bunch of things that one needs to get over. It's very complicated to include SDG and climate planning in a lot of infrastructure. The single biggest issue, there's a lack of bankable projects. But why the link is the lack is there is also because the use of financing instruments, the more de-risking elements, etc., have not been really used at the scale required. And of course, capacities need to be improved at the project preparation level, as well as risks have to be reduced in the minds and the perception of global flows of private capital. If you just look at that right-hand side, apart from all the fear, that I'm sort of raising in all these slides, there is, of course, a lot of opportunity. And if you look at that table on the right-hand side, by 2030, the green economy in Southeast Asia is expected to contribute $1 trillion in economic opportunities, 5 to 6 million in new jobs. And, the importance of creating new jobs, especially after COVID, can't be understated. And of course, look at the amount of GDP contributions that are expected from new growth areas. Now, this is just one of the estimates, and I've seen, even more, aggressive estimates in terms of what the green economy can drive. So apart from the fear that will happen in terms of lost jobs and lost GDP, there is actually a lot of opportunity by moving towards green economy, renewables, ocean sustainable transport, all those areas. Now, things, that are happening, and these are some of the emerging good examples that we are seeing in the region which can be scaled up. And I break it up into different elements. It's always interesting to see what's happening at a project level. So there are very good projects which can be multiplied and scaled up. Cambodia Solar Park project, a very interesting project, use blended finance and is creating a model for many more projects of its sort for renewable energy. But there's also discussions and work going on a thematic basis. So for example, in oceans, there's been the launch by ADB of a blue hub in Jakarta to focus on Southeast Asia to really pull together solutions on oceans financing. So we are seeing examples at project and thematic level which can be scaled up. National level, I think, is critical. So, whatever one says about, reducing risks, etc., is just made that much firmer if there is a national fund which is aiming at de-risking. And in this, for example, we've got PTSMI here. There's a very good project being done by PTSMI, SDG Indonesia 1, focusing on SDGs and green finance. And that's a very, very good model for scaling up and taking a dollar of public sector money and leveraging 6, 7, 8 times over. Another great example of a national approach to de-risking and mobilizing funds. Regional. The ASEAN Green Facility, I'll talk about that in a second, probably the only one of its type, which pulls together countries to try and make this effort on catalyzing green flows. There's a lot of work being done on taxonomy. I won't intrude too much into Eugene's points over here, but there is efforts being done at ASEAN level to create a taxonomy for sustainable finance, but also at utility levels to create taxonomies on green bonds, sustainable bonds, etc., which are aligned with global taxonomies. And then lastly, but most importantly, I think we are seeing an upsurge in bonds or interest in doing bonds, which are green, social, sustainable, and blue. The work that was done by Thailand 2 years ago on one of the first sustainability bond issuances, ADB's own green and blue bonds, shows that there is appetite. I think the Thailand bond was 3 times oversubscribed. Let me, sort of head towards the closure with sort of talking about this regional facility, ACGF. Now, this is a facility which is managed by ADB, and it's become almost like a point for many development partners to come together and really influence the debate on 2 things: creating green projects and mobilizing private capital to those green projects by de-risking those projects better. It was only launched in 2019. It is owned by all the countries of ASEAN with ADB, and it's managed by a small team in ADB. And just in the last 3 years, from zero, when it was sort of launched, today it has attracted about $2 billion in co-financing commitments from around 9 partners. That's the capital. It should be 2 billion in there. We have about 29 or 30 projects which are in the pipeline, which are already projects that we're working on. I think we have 11 projects which are actually already moving towards an ADB approval. 6 projects have actually been approved by the ACGF's own funding with very strong green impacts. You've seen the bonds I've already mentioned on the support it's given to bond issuances. We've just supported 3. And we've had a request for support from the ACGF for at least another 3 more. So clearly an area that needs to be scaled up, and some 20 odd knowledge products which have been developed across different sectors, from SDG bonds to blue finance. So ACGF itself is a major vehicle which is trying to put together this idea of catalyzing projects and capital. And you'll see at the bottom there, we have about 13 partners there, including both financing as well as knowledge partners. So a very important vehicle for the region. The Blue Hub I mentioned is a specific initiative to try and create projects in oceans health, whether on coastal tourism, coastal protection, or even municipality related close to lakes and river bodies. That is aiming to create 300 million worth of projects in the next 3 years, 2 years in fact, and has already got a partnership with the UNDP to try and do that capacity building part, working with SMEs, local governments, to help them understand blue taxonomies, blue finance, and then create projects which will hopefully then come for financing as we go forward. Probably the last thing to mention is the Green Recovery Platform. We launched this at COP26. This is supported by 4 funders over there, as you can see, led by the UK government in Glasgow, as well as GCF EU and the CDP, the Italian Development Agency. And it's interesting because this is essentially trying to put together 665 million to try and catalyze 10 times that in terms of projects. So we are already working on kickstarting this program off for recovery projects in Southeast Asia, which aims to try and catalyze projects and catalyze capital from Climate Fund. Has done a programmatic support in Asia for a number of projects, as well as the support being given from the UK FCDO. So, I think this gives a lot of room for hope, but of course, it's never enough. And I think what can be done in terms of scaling up some of these examples or replicating these in different regions or in different thematic areas would be the way to go forward. So I hope that puts a little bit of a spin or a sort of context in terms of the overall debate as we go forward. And I'll hand back to the moderator now. Thank you very much.
Thank you, Anuj, and for outlining the kind of gamut of things that we can work on and should work on to promote climate finance in the region. So we now have our 4 speakers who are each going to cover, kind of a different corner of the ecosystem, and hopefully together give you a nice mosaic of all the things that we need to be doing in parallel. And at the end of it, I'm going to ask them a tricky question, which is which one they would pick other than the area that they're working on to really drive forward climate action. So to start with, I'd like to invite Lynn Javier. Lynn is Assistant Governor at the Bangko Sentral, Pilipinas. She oversees supervisory policy and data, and she also represents BSP at the Basel Consultative Group and the Network for Greening the Financial System, and a work stream on scaling up green finance. And she's one of the major drivers in the Philippines for really greening of the financial system, and we are very lucky to have her. So Lynn, over to you.
This discussion and share our approach in promoting the sustainability agenda in the Philippine financial sector. Now, the BSP launched a sustainable central banking program in 2019, which formally recognizes the sustainability agenda as a strategic thrust of the central bank. The program echoes the critical role of the Bangko Sentral in promoting effective management of climate-related risks in the financial industry, cognizant of the significant threats that these pose to financial stability. Oops, my slides are not moving. I'm so sorry. Did it move? I'm so sorry. It's all right. Okay, the BSP sees that part of this role is to promote an enabling policy environment to channel financing to sustainable investments and projects. The principle of proportionality governs the regulatory issuances of the Bangko Sentral, including that of the Sustainable Finance Framework. This actually allows banks to adopt policies and processes suited to their business model, size, and systemic importance. The approach also recognizes that banks actually have varied exposures to climate-related risk, and this framework and this approach allows them to adopt responsive actions suited to their respective situation. Now, the BSP, along with our development partners, also embarked on awareness and capacity building initiatives on ESG-related risk even before we issued the Sustainable Finance Framework in 2020. Now, this slide shows our phased issuance of regulations on sustainable finance. We issued Circular Number 1085, or the Sustainable Finance Framework, in 2020, which signals the direction of the BSP in promoting the sustainability agenda. Now, this was followed by the issuance of Circular Number 1128 on E&S Management Framework, which provides granular expectations on the management of environmental and social risks in relation to credit and operational risk exposures of banks. The third set of regulations that will be issued will cover guidelines on the management of ESG-related risks in relation to the investment management activities of bank, conduct of stress testing exercises, and enhancements in prudential reporting. Now, we issued the Sustainable Finance Framework in 2020. That's at the height of the implementation of stringent COVID-19 restrictions. We believe that it was the appropriate time to issue the said circular as we see banks reviewing, resetting, and reassessing their strategic direction in response to the pandemic. The approach taken by the BSP in crafting this issuance was shaped by the feedback we received from the industry during our capacity building initiatives, as well as the results of the own study conducted by the Bangko Sentral. Now, all this highlighted three key points. First, banks need to see the business case in adopting or embracing the sustainability agenda. Second, the adoption of the sustainable finance framework requires or involves changes in the business strategies, policies, and operations of banks. And third, the impact of climate change manifests in the traditional channels of risk exposures of banks. Now, this confirmed that the BSP's institutionalized approach in issuing risk management guidelines may also be applied to the issuance of sustainable finance framework, as well as in the E&S risk management framework. Circular 1095 highlights important points, also following the approach for other risk management guidelines. It emphasizes the tone from the top in incorporating sustainability considerations in strategic direction, operations, corporate governance, and risk management systems of banks. It sets out clear responsibilities and highlight that the effective management of risk is a result of collective actions of all personnel across the organization. And the circular emphasizes that disclosures would not only help inform or empower the public in making decisions, it would also contribute to shaping behavior and actions of banks in this respect. This provides the highlights of Circular 1128 on the management of credit and operational risk exposures in relation to ESG risk. We leverage on earlier issuances on credit and operational risk management. The circular expects the board to set strategic environmental and social objectives for the bank's credit operations. Now, these objectives may include progressively increasing the portion of the loan portfolio allocated to green or sustainable projects. For operational risk, banks are required to conduct vulnerability assessments and consider these results in their business continuity planning. We also expect bank management to identify environmental and social risks that may affect the performance of key personnel as another trigger of operational risk exposure. Now, the BSP believes that in promoting the sustainability agenda is actually a shared responsibility. So the BSP is part of an interagency technical working group we call as the Green Force, which was convened to promote sustainable finance on a national scale. Last year, the Green Force launched the Philippine Sustainable Finance Roadmap and Guiding Principles. The roadmap provides the broad plans to promote sustainable finance in the country by harmonizing policies across the financial sector, creating financing pathways, and developing a pipeline of eligible projects. Now, the Guiding Principles aims to promote common understanding among various stakeholders of the economic activities in the Philippines considered to be sustainable. This is a critical rail for financing to flow to identified green or sustainable sectors and activities. In line with the issuance of this document, the financial sector regulators, that includes the SEC, the IC, the PDIC, and the BSP, created a work stream to harmonize regulations in the financial sector, to operationalize all our commitments in the roadmap. I'll pause here, Naeeda. Thank you very much.
Thank you, Lynn, for your interventions and for describing the cascading approach BSP has taken on kind of regulating and promoting green finance amongst the banks in the Philippines. I think the key point that I would like to make, I think, on your presentation is that it's important to understand what a key and central role the central bank has really in influencing the financial sector. I mean, as you mentioned, banks in the Philippines react when there's a business case. Part of that business case comes from regulation. And then in addition to that, I think that through all the regulations to integrate regulations and guidance and capacity building that you're doing with banks to kind of integrate ESG, what you're essentially, or what one of the things we're going to be seeing is increasing shares of financial portfolios, or at least current shares of financial portfolios being monitored in terms of what green or environmental projects they're supporting. And this is mobilizing finance in small steps and then incrementing over time for climate projects. So that's the key link to the NDC and really a critical role that BSP plays and other central banks in the region too. So thanks for highlighting that. I'd now like to move to a different part of the ecosystem, focusing again on kind of frameworks, but at a regional level, and invite Eugene Wong to give a short presentation. Eugene is the Chief Executive Officer of SOFIA, which is an independent institute established to promote sustainable finance, and previously was a strong advocate for green finance as part of the ASEAN Capital Markets Forum in his previous role as Managing Director of the Corporate Finance and Investments of the Securities Commission of Malaysia. So Eugene, over to you now for a presentation on the ASEAN Taxonomy, an extremely exciting initiative that everybody's been keeping a close eye on across the region.
Thank you very much, Naeeda, and thank you very much for inviting Sophia to be part of this event. I think it's very useful to have all of us gathered here to share our ideas and to inspire each other with our latest developments. So let me first talk about the approach of the ASEAN taxonomy, and I must say several things come to mind, right? The first is that it's actually unique because this is the first regional taxonomy where the members working on it are actually a cooperative arrangement rather than a legal arrangement like the EU. It's also inclusive because it enables all the AMS to be able to use it. And it takes into consideration different socio-economic conditions and starting points, and also the resources that we have available. It is here to promote an orderly transition, and that's really, really important for our part of the world. But I will say one thing, I found that this taxonomy is actually very inspirational because we had the policymakers from the ministries of finance, the central banks, the capital market regulators, and the insurance regulators come together and within a span of less than 8 months, develop a taxonomy. Now, it took a lot of work, it took a lot of cooperation, and it took a lot of like-mindedness to that. So that shows you how important this agenda is to ASEAN. Let me start off by sharing a bit with what the taxonomy is about and how it came into being. So the ASEAN taxonomy is actually an initiative under the auspices of the ASEAN Finance Ministers and Central Bank Governors meeting. Because they had come up with an agenda to promote sustainable activities and investments in order to drive the region's sustainability agenda. The need for a common taxonomy in ASEAN was actually identified in the ASEAN Capital Markets Roadmap for Sustainable ASEAN Capital Markets, the ASEAN Senior Level Committee on Financial Integration's report on the roles of ASEAN central banks in managing climate and environment-related risks, and BSP was, is of course part of the SLC. And also the ASEAN Working Committee on Capital Market Development's report on promoting sustainable finance in ASEAN. So these four bodies, the ASEAN Capital Markets Forum, the ARM, the Senior Level Committee on Financial Integration, and the Working Committee on Capital Market Development, represent the banking, capital market, and insurance sectoral bodies under the ASEAN Finance Cooperation process. And they came together to form the Taxonomy Board to develop, maintain, and promote an ASEAN taxonomy. This effort was endorsed by the ASEAN Finance Ministers and Central Bank Governors meeting on the 30th of March 2021, and SOFIA acts as the host for this board. So as you can see, the board comprises members who represent their different work streams, being the ACMF, ARM, SLC, and WCCMD. There are 2 members representing each work stream. And for countries who were not represented through the work streams, they were invited separately to nominate someone to sit on the board. So this is a very inclusive initiative, as you can see. Some principles were agreed on at the onset in developing and implementing the ASEAN taxonomy, and these are very important because they guide what the taxonomy is meant to be. So the first is that this ASEAN taxonomy is meant to be the overarching guide for all member states, providing a common language and complementing their respective sustainability initiatives. What does this mean? It means that member states can come out with their own taxonomies to address their national priorities, but we'll all be guided by one common language and one overarching position on what sustainability is. The second principle is that we are going to take into consideration other widely used and relevant taxonomies as appropriate, and we'll contextualize it to facilitate an orderly transition towards a sustainable ASEAN. We don't want to reinvent the wheel, but at the same time, we want to make sure that whatever we adopt is suitable and supportive of the ASEAN ambition. The third principle is that the ASEAN taxonomy is going to be inclusive and beneficial to all ASEAN member states. Now, this is exceptionally important because whatever we do for ASEAN must be workable for every member state. The fourth is that the ASEAN taxonomy must be a credible framework and where appropriate be science-based, particularly for the climate ambitions. This is really to avoid greenwashing and to provide clarity. And the fifth principle is that this taxonomy will be aligned to all the sustainability initiatives being undertaken by the capital market, banking, and insurance sectors, or at least they shouldn't be in conflict. But so far we found that everyone's really come together and we're all converging our efforts into one. So let me share with you a bit about the construction of the taxonomy. So this taxonomy actually is compatible design-wise with the EU taxonomy, although you will find that there are augmentations to it to make sure that it caters to ASEAN's needs. Now, why is it compatible? Firstly, the taxonomy is driven by 4 environmental objectives and essential criteria. The environmental objectives are the obvious ones: climate change mitigation, climate change adaptation, protection of healthy ecosystems and biodiversity, promoting resource resilience, and transition to a circular economy. The essential criteria, like the EU's, is actually to do no significant harm, and we have an extra one, which is remedial measures to transition. Now, this is to allow for transition, and I did say this is a transition facilitative taxonomy. The taxonomy has 2 components. The first is a qualitative principles-based foundation framework that classifies activities into green, amber, or red. So this is done because we have countries, member states, and users who may not have the data to immediately come up with quantitative positions. So start the journey. I think that's the message we're trying to give. The second is the plus standard. The plus standard is a threshold-based screening criteria for 6 of our focus sectors. And I'll share with you the focus sectors later, and the 3 enabling sectors. Now, this plus standard uniquely has tiers. We have tiers because our member states have different starting points. So the metrics and thresholds, the metrics will be the same, but the thresholds used will vary from country to country, and we need to take this into account. So again, I shall share this with you later on. Now, the foundation framework is very simple. It's a principles-based approach. As it is, we already have 2 of our member bodies using it. The Malaysian Central Bank and the Malaysian Securities Commission do adopt a principles-based approach. And really, this approach is simple. It gets people on the journey immediately. Anyone and everyone can use it because it takes you through a simple decision tree to look at the classification of your activities. Now, I talked about the plus standard just now, and the plus standard, of course, is going to be more specific because there are going to be metrics and thresholds for the activities that we want to address. So we have identified 6 sectors in ASEAN that contribute to 85% of GHG emissions and 55% of our GVA. That's agriculture, forestry, fishing, manufacturing, electricity supply, transportation and storage, construction, real estate, and water, sewage, and waste management. So these sectors are the ones which will focus on developing metrics and thresholds for the plus standard or the quantitative part of the taxonomy. Now, I did say just now that this taxonomy is meant to promote transition, and that the plus standard actually in fixing thresholds would have different tiers. Now, why is this done? We want to have multiple thresholds per activity at any single point of time because our member states have different starting points. So we may say that the threshold for, say, electricity generation is 200 grams per kilowatt hour. That's not going to work for everyone. Some people may think they can do better and some people need more time. But we want everyone to come on board at the same time. We want everyone to start their journey at the same time. So the solution is not to come up with one threshold and ask everyone to adopt the threshold. It's to come out with reasonable thresholds that everyone can adopt and then incentivize them to progress to low emission levels over time. So we'll have to retire the less ambitious tiers over a period of time. And we use a stacked approach for this. So if you look at the most advanced tier, it's actually going to be a performance level that's aligned with net zero targets or the Paris Agreement goals. The second one is not as great as tier one, but it's contributing significantly to those goals. And the third tier is actually a performance level that's not meeting tier one, but it's above business as usual. So essentially, we want them to start work immediately. So with that, I'll stop here. Thank you very much again.
Thank you, Eugene. And if I may say, a big congratulations and very commendable work in like under a year or maybe a year and a bit for Sophia, but also financial regulators in the region, to come up with a solid framework and an approach for a regional taxonomy in a region which doesn't have, which has varying data and different levels and capacity. I really like that you've managed to have an approach which tries to bring everybody along and get a commitment at the same time. So congratulations on that. I think critical to your piece and your the role of taxonomies in the climate finance ecosystem is its ability to draw a line in the sand for financial sector and other stakeholders between what's green, what's hopefully will be green in the future, and what isn't at all. And I think that is a really important line that has to be drawn before you'll really get finance at scale, being able to flow from financial sector and other stakeholders who don't necessarily all understand exactly what green is or how it remains that way over time. So big congratulations on that, and thanks for sharing. And now I'd like to move to our next speaker, who's going to look at this in maybe a little bit more bottom-up way. So I'd like to invite Edwin Syahruzad, who's the President Director of PT Sarana Infrastruktur in Indonesia. So PTSMI for short is a government-backed financing institution that in Indonesia that finances infrastructure and is a critical player on green finance in the region, especially most recently since they're scaling up their own green finance facility. As President Director, Edwin oversees the overall operations of the company and its long-term strategy, and has been a big driver of PTSMI's role on green finance. So over to you, Edwin, to talk about the work that PTSMI is doing.
Okay, thank you, Naeeda. Thank you for having me in this discussion. Yeah. I think it is very useful for all of us to share different ideas and perspectives, yeah, and also provide recent updates, what's going on in the climate and sustainable finance according to their perspective. Yeah. And of course, PTSMI as a public development institution, public development bank, we are a non-bank financial institution. I think we respond to the climate change issues, yeah. And the thing that we would like to explain here is our initiative, yeah, to establish a blended finance platform. It is very practical blended finance platform, which is supported by a lot of partners, including ADD, of course. And the name of the platform is SDG Indonesia One, whereby it was established in 2018. Yeah. Please next to the, please move the slide. I think this is the platform that we established in 2018. Yeah. And I think as of now, we have obtained a commitment amounting to 3.2 billion from our 34 partners. Basically, the blended finance platform is try to provide solution, yeah, for speeding up climate finance, sustainable finance, as well as SDG finance. Yeah, basically we understand there are challenges here and there. In short, there are lack of project readiness, yeah, due to inadequate process in the preparation and in the preparatory stages, yeah, of the project preparation, including risk allocation. So our blended finance platform offer a consultation and project development service to improve the quality of the green and sustainable project itself. And also it uses a variety of source of fund from many stakeholders, including a de-risking mechanism, which is becoming a common feature, yeah, of public development banks like us. And we also synergy and collaborate with relevant stakeholders and strategic partners in order to make this materialize. So basically the platform concept comprises of 4 elements. SDG development facilities, which is primarily dedicating to our customer, which is a local government, primarily local government. SDG de-risking facilities, this is the uniqueness of the product that we offer. De-risking can be on the private side in the context of providing de-risking tools to help private have an access to finance. And de-risking could be also on the public side in the context of project development facility that we offer to our stakeholders. And of course, financing facility and equity become also mainstreaming the sustainable finance. Next, perhaps I can show you also the contribution of the ADB through the Green Finance Facility Program. Basically, ADB provide us with the loan facility of $150 million US, combination of loan and a grant element, which is primarily coming from the Fed and the other from Luxembourg government. And basically the combination and loan and grant is gonna be designed for supporting a green sector and SDG sectors. Including in the SDG sector is what we call it, we have a National Economic Recovery Program, which is basically a loan that we extend to the local government during 2020, 2021, and 2022. And I think for 2022, we are using this facility to support the national economic recovery of the regional government through the loan extension, which is primarily help the local government having their pathway to the recovery in a greener or in a better quality process. I think we provide long-term tenor, variety of financing instrument, and more importantly, we are starting to the implementation of ESG and also provide a flexible retroactive finance. So basically, this is part of the solution that we have established, and hopefully this can provide more incentive to support the green as well as sustainable finance to Indonesia. And last but not least, I think next, I think as a component of the GFF facility, this is as already explained before. Aside from ADB, we have also another partners, including AFD, Asian Public Development Banks of France. We have many partners. Right, we can go back to 34 partners that has supported our SDG Indonesia 1, and perhaps this is our initiative that can be benefiting Indonesia in also achieving their NDC according to the Paris Agreement. I think I stop here and return to the Naeeda. Thank you.
Thank you, Pa Edwin. Thanks very much, and for sharing Indonesia's pioneering work on this. Actually, this is one of the most exciting things, not just because ADB has been a part of it too, as well as other partners, but because it shows us for the first time that you can create a national platform, that it can go beyond just public financing. It doesn't, with the vehicles of the past, the environmental protection funds, etc., that we've seen in the region are important, critical, and continue. But this one shows us that you can do it in a in a way that mobilizes other capital and that can spur a pipeline of smaller projects in cities and in smaller companies, and in a way that remains financially sustainable. So I think this is really a really key thing that Indonesia has done with SDG Indonesia 1 and the Green Finance Facility, and we can't wait to see how it pans out in the next couple of years. I'd like to move on. Before I move on, actually, I'd just like to say thank you to the audience that have been providing questions. We are hearing you. We have them written down, and we will direct them to the speakers when we get to the panel discussion. But before that, I would like to introduce our fourth speaker, Sean Kidney, who is the CEO of the Climate Bonds Initiative, which is an international NGO working to mobilize global capital for climate action. CBI, as most of you will know already, is arguably one of the most influential INGOs working on green finance. They spurred green finance throughout the world, I would say, and by being one of the first institutions to really draw a line between what's green and what's not through the CBI taxonomy. Sean himself, of course, is involved in all the discussions globally, I would say, on green finance, at least all the important ones, that is kind of driving things forward. And we're really, really lucky to have him. So Sean, over to you on green bonds in ASEAN and their continuing and hopefully future role. Thank you.
Thank you very much, Naeeda. And hey, what a great lineup of speakers, hey? I feel illuminated, especially Pak Edwin. I'm so excited to hear about the launch of the Blended Finance Facility. And for all our listeners, in about 20 hours, Pak Edwin and I will be speaking together at another forum, along with Anuj Mehta and Sri Muriani Indrawati, to hear more about net zero emissions planning in Indonesia, and also to launch the Climate Bonds Green Infrastructure Investment Opportunities Report for Indonesia, which is something I'm going to talk about a little bit, in the sense that we need to be clear about what needs to be done and have a sense of what the pipeline is. But look, to start off with, you heard a fantastic exposition by Anuj about the challenges we face. We do need to be aware that urgency is everything now. Whilst the shape of the future has now been decided, there is no doubt about that, where our societies are going: clean, green, resilient. There is an issue about the speed of getting there. The IPCC, Intergovernmental Panel Climate Change Report and Adaptation, launched a couple of weeks ago, is frankly terrifying. Frankly terrifying in terms of the expected impacts on ASEAN countries of climate activity if we don't drastically reduce emissions. And even if we do drastically reduce emissions, we have baked into the system now severe climate change. We are going to have a century of difficult times, everyone. It will mean much more severe typhoons in the Philippines. We do need to prepare. We have to have a resilience agenda, not just a mitigation agenda, especially in ASEAN as unfortunately, a taker of these changes that are happening around the world. We do need to prepare for more severe floods in Bangkok, in Kuala Lumpur. We had floods just recently. We know how bad they've become. They are going to get a lot worse, everyone. That means a lot of things that we have to do for our urban infrastructure, for our coastal protection in Jakarta, for all sorts of investments around infrastructure and around supporting the poor in this area. We need to be thinking about food security. With the kinds of storm surges we expect to see in the South China Sea, compounded with the lack of water, we will see step changes in salination in the Mekong. And that means that no longer will it be the first 100 kilometres, but we can expect to see salination affecting the whole of the Mekong Delta, with extraordinarily severe impacts on the supply of rice for the region. We have to prepare for these things and prepare for these things happening in shocks. Climate change is not linear, unfortunately. It happens a bit like a war appears in Ukraine or a pandemic appears in China. This is how we will experience it going forward. So prepare, including prepare for urbanization. We will see in the next 30 years a much higher speed of shift to urbanization in the region. Jakarta is not only going to stay as the second largest city, it could overtake Tokyo because of the extraordinary movement of people to Jakarta, and that will apply across the region. We expect to see by 2050 rates of global urbanization at the 80% level. We're currently at 56% and slightly lower in the ASEAN region. So just think of the ramifications for this. Think of the ramifications for creating productive cities to absorb those people, or else what will happen, and so on. Bear that in mind. The good news, and this is, of course, the main reason I'm here, is to talk about there is good news, which is capital wants to move. At least amongst global institutional investors, there is an acute awareness of the risks, to their ability to get returns, to match assets and liabilities over the longer term, to ensure they can pay Naeeda's pension when she finally retires in 2060. We need to prepare for that. And that requires a different approach to investing, to make sure that that investing helps support the sustainability of our economies, helps ensure that they will be productive and to give returns over the longer period, and reduces the risk, minimizes their risk of them being hit sideways, knocked out of the ring by a catastrophic event, which is, of course, the risk we're looking at. Now, how they do that, that's hard. They're individual investors. But what I can tell you is when it comes down to green, social, and sustainable bonds, there is proof here. We've seen a drastic growth in this market from $3 billion when I started 10 years ago to nearly $3 trillion US outstanding. This is an extraordinary growth. And we will see a run rate of something like $1.5 trillion by the end of this year. In other words, we are in that kind of area of growth, this market. It's growing very, very fast. Why? Because these bonds do two things. They meet broadly their existing risk yield requirements, and they address a future risk that investors are trying to figure out how to address. The appetite is there. There are oversubscription rates around the world. There are extraordinary price benefits. There is a Philippines bank, Lynn will tell you about, who managed to get a negative interest rate green bond in the Swiss market when they issued a few years ago. We have some extraordinary stories of reduced cost of capital for issuers in the region that we can tell you about. Part of the reason this is happening is that in the secondary market, in hard currencies, these bonds are performing better because investors like the extra feature. Whenever there's a downturn of the market, when Donald Trump used to send a tweet out, we would find that green bonds held their value. They were value protection devices. They still are. Hence, we have a lot of investors who aren't interested in the green. They're just interested in the fact that value protection, and that feeds demand. So we have success here, and that's sovereigns as well as corporates, by the way. So the question is, what will qualify? How do people take advantage of that? Well, clearly, there's work to be done to advise people. This is why the work that the ASEAN Catalytic Green Finance Facility is doing in providing technical assistance to the region is so important. And there are other facilities, and of course, PTSMI is itself providing fantastic support to potential issuers and investees in the region. We know that it's about clean energy. Sure, easy, simple, but we need a lot more of it. We need hydro, we need geothermal, we need grid connection. We will have to improve the electrification of our societies by fourfold by 2050, quadruple at a minimum. Now that is a lot of grid connection and a lot of electrical capacity. We will need to ensure we shift to green, clean transport. That means subway lines like in Bangkok or Jakarta or Kuala Lumpur, and less in the way of freeways. We've made some terrible planning mistakes in Manila over the last 50 years. We need to fix those now. There are plenty of models around. We've seen bond issuance from subway lines in Bangkok. But of course, we could also look for different financing models like MTR's financing model in Hong Kong, using property development to pay for the subway. It's a rich area. There are investors interested in investing. But it's more than that. It's water, it's waste management. It's, of course, green buildings and urban development. And when I say green buildings, I mean super energy efficient buildings and buildings that are designed to withstand floods in places like Jakarta that can be working again within a couple of hours rather than be knocked out for a couple of days in a severe floods. All the towers we're building in Jakarta, they need to be energy efficient. At the moment, their use of air conditioning is incredibly inefficient, which puts strains on Jakarta's energy system. We can improve on this, but we can do it in every city in the region. We do need to see more transition finance. The work that Eugene has been leading is so important in providing guidance in this area. Industrial, chemicals, these high carbon sectors that need to shift to low carbon. Fertilizer, we will see in the next 3 years a rapid growth of green hydrogen. Hydrogen produced from renewable energy around the world. I had on our India webinar 2 weeks ago, the CFO of Adani announcing that they will be producing green hydrogen to produce green fertilizer, replace gas as a feedstock for fertilizer at 97 cents a kilo in 3 years. That is a world-beating price that shocked everyone that I've spoken to around the world that are doing analysis in this area, because suddenly it makes volume, large-scale green hydrogen a potential and a game changer for so many industries. This stuff is happening. And then, of course, as I mentioned, resilience. What are the food supply chain issues? Can we do more storage facilities for food in the region to ensure that we can deliver, avoid wastage, and of course also have some reserves, more reserves? Social housing is a resilience investment, particularly social housing that can survive typhoons in the Philippines and be rebuilt or back in operation quickly afterwards, and even jobs recovery. Notable that the European Commission has issued tens of billions of euros of green or social bonds to finance job recovery support during the pandemic. That's a great precedent for the region. There is so much. The main thing is the appetite is there, the solution is there. Look at our Green Infrastructure Investment Opportunities Report as a bit of a guide. The future, clarity about what is included. That's why the taxonomy work that the ASEAN Taxonomy Board is doing, but also that Thailand, Indonesia, Vietnam, and others are doing is so important to provide clear guidance. Preferencing, the work Lynn is doing at BSP is so important as part of a global movement to ensure that we are aware of the risks that we need to address properly, and that we take moves we address them properly, and we introduce incentives for investments and activities that will reduce forward risk for the financial system. The work to buy down capital cost is well underway. That's the Anuj facility. That's the PTSMI blended finance facility. But there's going to be a lot more of this. There needs to be a lot more of this. We will see guarantees for green proliferating across the region. Bring those deals forward, folks. We have the support to ensure we can get access to capital. We do need to tackle some challenges that haven't been tackled yet. The aggregation of small landhold or municipal investments into facilities that can tap capital markets. We need more work. Of course, banks, sovereigns, corporations are forms of aggregations. There's probably scope for doing municipal finance facilities, as exist in many richer countries, that borrow wholesale to lend on to cities around the world, around the region. There are many different kind of ideas like that. All I would say is there are so many precedents we can use, but what we really need at this stage, given the investor demand is so strong, is just deal flow, more deals. So if you're out there and you think your project might fall into the green and sustainable and social category, this is your time to shop around for a tool that will give you more access to capital, will give you access to risk support, risk mitigation financing, and lower your cost of capital through that, and a way of establishing yourself in a market that is booming. Get in now and then be a long-term tapper of this sort of capital in a way that will flow on to all aspects of your work and your business, from equity to fixed income. That's the opportunity. What I can tell you is the demand is extraordinary. The demand is amazing around the world and in ASEAN. And we've had no shortage of investors willing to come out and say so. BlackRock, State Street, Manulife, Sun Life, etc., who will happily tell you how keen they are on this instrument, how keen they are on more bonds issued by the ACGF, by customers in the area, by blended finance facilities customers in the area. It's an exciting time, but I want to stress the challenge is huge. The urgency is frankly unnerving. The speed at which we need to change in the region is unnerving, but possible if we move fast. Thank you.
Thank you, Sean, and especially for that last note. I mean, really, your intervention, and you do this, we've been on these kind of panels before, and you do it every time so well, bringing a big global perspective because you're plugged into all the major discussions on this worldwide, and then making it real for ASEAN. So thank you for that. We're now going to open up a panel discussion. And we've had a number of questions that have come in the last couple of minutes, in the last half an hour. I've sent some of my fellow panelists some of the questions in the chat earlier. So we will address most of your questions, I hope, maybe not exactly in the form that you want, but hopefully we'll cover all the bases. In order to kick off the discussion, so I will start with one round. I've tried to collate some of the questions we've got, and I'll go around and maybe allocate them and ask each panelist to come in once. And then when you're making your intervention to the panelists, if you'd like to pose a question, just to make this a bit more chaotic to each other, please do, and name fellow panelists too. So let's start with a round, and then we'll see what else comes in from the audience, and then open it up and allocate for the next set of questions. We have about 20 minutes or so, or half an hour. Just under half an hour. So let's kick it off. So to start with, Anuj, since you started us and set the stage for us, one of the questions we got from the audience was green finance facilities. What role can they play for greenfield projects? I mean, so far, maybe the evidence has been that they support more projects that are already somewhat cooked. So what role should they play for greenfield projects? Second one, my own question to you. Why do we need regional action on financing? I'm not talking about the kind of things that Eugene is doing, which is trying to promote a taxonomy. But why do we need regional vehicles on financing? And what role do they play to spur national action or local action, as Sean was pointing out, local government action? So maybe if we can start with that, Anuj.
Sure, Naeeda, thanks for that. What a great series of interventions from everyone so far. You know, the first question, which is whether the green finance facilities would work for greenfield projects. It's mainly for greenfield projects. The green finance facilities are mainly for projects where there is a risk. Risk is often defined by private sector investors as upfront risk, where there is a lot of risk of construction, environmental clearances, and then maybe a little bit in terms of the initial years of revenue generation. So greenfield is exactly where most green finance facilities should be focusing, and maybe a year or two after construction. I would say that's the major focus of de-risking green finance facilities. Of course, they can, because the question has two parts, greenfield or brownfield, and I'd say more greenfield. The second could be in terms of the use of money, your feasibility studies. Now, that is technical assistance, project preparation versus co-financing. So I think, like we have sort of devised the ECGF, for example, it includes both. So an element of risk is actually preparing projects better. So that's where we use technical assistance for actually proper project design, ensuring it meets certain taxonomies, etc. and also doing the financial modeling. And then the finance itself is the de-risking finance into CapEx, the co-financing part. The second question which you had, which is on how can regional actions on finance drive more national financing? When I started working on the PPP effort in India in 2006, whenever we spoke about PPPs, the first question that was asked, there on PPP in water, where has it been done before? And when we spoke about PPPs being done before in France, a lot of the Indian examples didn't work. They just didn't want, the situation was very different. So, when we started working in one particular area, the neighboring provinces wanted to follow the same model. So I think a regional effort works very well because of two or three things. It brings together a lot of decision makers onto a common platform to discuss, deliberate, etc., and form common policy actions as a first. So it dispels knowledge and allows people to sort of share actions that they will, sort of put forward in their own countries. But second, I think is the demonstration effect. Within our region, when we see one particular project working well, such as STG Indonesia one, now that becomes an immediate catalyst for other, it could be country level, but it could even be provincial level to try and replicate. I'm already using the SDG 1 example to try and create something on oceans finance in another region, right? And that allows me to sort of share from something being done in the region itself, which is much more commonly understood than any other place. The other last point to make is, the global pools of capital sometimes tend to look at regions. So if they see something happening in one area, and Sean may correct me on this, but when Southeast Asia is in that particular region, and that I think would be another driver to, for global pools of capital to look at regions in which some things may be happening in some countries ahead of the game, but generally I think it will pique interest for the region as a whole from these global pension funds, etc. I'll stop there.
Thanks very much, Anuj. Thanks for tackling those and for clearly highlighting the importance of regional. And I agree with you on the demonstration example. It's exactly the way to go. The key will be really, I think now, is going from national to local level. I think Sean pointed it out, and we also see it as an increasing challenge. So how can we really, unlock that and move now from one level to another? I'd like to ask AG Lynn. So in terms of, you highlighted what the BSP is doing, setting up this regulatory framework. I'd like to ask maybe 2 points. One is, how are you now going to monitor what the banks are doing? So you're saying you're trying to integrate climate risk into credit operational practices. Are you also going to monitor that? How are you going to monitor what they're doing? And considering the points you made about the importance of bank management and bank staff really in the rolling out of ESG integration, how is BSP or others going to support the capacity gaps in banks in the Philippines? Or maybe the banks in the Philippines are already more ahead? I don't know. So have you thought about this aspect of it? Thanks.
Yeah, thank you, Naeeda. Maybe I'll combine my answer to those questions. Actually, before we issued circular number 1085, we started with a capacity building program for the industry, flagging that these risks are real and we have to do something about it. So that was 5 years before we actually issued the circular on sustainable finance framework. It was only in 2020 when we mainstreamed the regulations on sustainable finance. So under that circular, we require banks to submit transition plans, providing specific action plans and timelines on when they see they could fully adhere to the expectations of the issuance. So right now, all our supervision teams are engaging banks and discussing with them feasibility of the plans that they have submitted or forwarded to the Bangko Sentral and challenging the assumptions as well as project targets of our supervised financial institutions. Now, on the BSP's part, again, before the issuance of the circular, just to highlight as well to the industry that we are being affected by climate change, the BSP conducted a study on the impact of extreme weather episodes on the performance of the banking industry. In particular, that study measured its impact on asset quality by the increase in the non-performing loan and the decline in the total deposit liabilities of banking industry. So true enough, extreme weather episodes has increased the NPL of these banks, as well as resulted in a decline in the deposits of banks affected by typhoon. What's important is that in terms of capacitating, we have to focus on making the banks or the financial institutions understand this risk. That's why we keep on highlighting that this would manifest in the traditional channels of risk that we are all familiar with. These are the headline risk: credit, operational. We're talking about liquidity risk as well. So in understanding this risk, we expect now banks to actually have some policy systems and processes in place to effectively manage this risk, and at the end of the day, see the opportunities behind this shift in strategy. So other initiatives of the BSP along this line, just to quantify also the impact, we are now engaging some development partners to conduct vulnerability assessment on the exposures of the smaller banks. These are banks located in the regions frequently affected by typhoons. So they're mostly exposed to physical risk. So, and then we will also be conducting stress testing exercises. Again, to improve the risk management systems of bank and flag that this could be quantified and this could pose significant financial stability threats. I'll pause here, Naeeda. I hope I answered your question.
Yes, you definitely did. Thank you. Thank you very much, AG Lynn. So we have, I'm just like peppered with questions right now coming from the audience. So I'll just maybe quickly move on to Eugene. So we got two questions, one of which will not be unfamiliar to you. One was that how much did you or are you collaborating with international institutions when developing the taxonomy? And a concern has been raised, and I'm sure you hear this a lot. What is the risk that taxonomies from different parts of the world are going to do different things and they're not going to be uniform or harmonized with each other, and then that just creates more confusion than anything else? So that's one question. And the second is equally interesting: how is gas and nuclear considered in the ASEAN taxonomy? Where are you landing on that one? Thank you.
Oh, thank you. Both very interesting and pertinent questions. Let me first take the question on engaging with other taxonomy developers. So when we started work on this taxonomy, involved the financial sector policymakers of all our member states. And really there was a pooling of intellectual capital. So many of these members had already either looked at developing their own taxonomies, had issued their own taxonomies, consulted on them, or were in the process of doing something. And these members had already engaged with international taxonomy developers, as well as multilateral development agencies, MDBs, ODAs, and of course, even with CBI as well. So when they came together, they brought together with them the knowledge that had been acquired in the past. And this actually enabled us to speed up the process because we knew what other taxonomy developers were thinking about. So we are now in the stage where we will consult on this taxonomy with other taxonomy developers. In fact, we've been in touch with many of them. And also just to share, CBI was also involved in the development of the ASEAN taxonomy. We'd engaged them quite a bit as well. I think that question on many different taxonomies operating simultaneously is a very important and very critical question. I don't think we'll ever have a single global taxonomy. And we can't do that because every country has its different pressure points. I'll just explain to you, even within ASEAN, for example. For Singapore, 75% of emissions come from bunker fuels. For Indonesia, 70% comes from agriculture. For Vietnam, almost 70% comes from energy. So you see the diversity in the problems that we face. Therefore, everyone's got a different starting point, a different pressure point. They've got different socio-economic factors. They've got different resource constraints. What we need to ensure is that those taxonomies are interoperable. And what do we mean by interoperable? It means that they must be looking at the same thing. They must be targeting the same thing. The environmental objectives have to be the same. We must have similar safeguards like the do no significant harm. We must be using metrics that are comparable across. And we must be transparent on the thresholds that we are using, because the thresholds may not be the same, but we must be transparent and we must be able to reconcile those thresholds. And I think what is also very important is that it's not just about taxonomies. Taxonomies need to go hand in hand with transition pathways, because that's the really important thing. The transition pathways translate into the taxonomy, and the taxonomy enforces the transition pathways, because we need the transitions. We need that orderly, affordable, and just transition. So we need to have that happen. On the second question, on whether we have nuclear and gas in, well, so obviously the ASEAN taxonomy is an outputs-based taxonomy. It looks at the consequences of the economic activities. Therefore, what is important is if a particular activity is being considered, the question is, what is the emission level of that? So that is an important element that we consider. Gas, as you know, is a transition activity, is a transition option. And therefore, the question is, how do you enable gas without a lock-in that's detrimental in the long term? How do you enable gas while still fueling an ambition to continue looking for new technologies and new ways that are better than fossil fuels? And of course, nuclear is the same. Will nuclear be safe? That comes back to the DNSH ability. I'll just stop there, Naeeda. Thank you.
Thank you very much, Eugene, for tackling those ones, and they weren't exactly easy questions. So thanks for taking them. I have a couple more, which I'll maybe ask Edwin, and then I'll ask Sean, and then open up for any remaining questions. So just let the audience know if you have any more tricky questions or any other questions, please send them in now. We'll stop taking them after about 5 minutes or so. So if I can ask Edwin, there is a question that came in from the audience. Firstly, it's great to hear that Indonesia is working with so many partners, but how does it really work in practice? Do you go out and try and understand what different partners want and then try and match it? Do you act as a clearinghouse between sources of finance and projects? How easy is it really to get financing commitments to materialize for projects or for pipelines or for your facilities? If you could tackle that, please, Edwin. Thank you.
Okay. Basically, we are a non-bank financial institutions. So we are actively in day-to-day in providing finance to our partners, to our clients, whether it is corporate in the form of project finance and corporate finance, as well as public finance. We also extend lending to the municipality. Perhaps I can show you the example, practical example of our involvement in the green projects. We have exposure to hydropower projects. It is quite interesting because in this particular case, we provide a credit enhancement facility, which is essentially a standby facility, as a supplement to the bond issuer. So by providing this facility, we can get our client, Tamaris Hydro, they can get a credit enhancement notching up by even 6 notches upgrade until so that the final rating is AAA from the initial rating single A minus without credit enhancement, without standby facility. So, and by then the project can have an access to the bond market just recently by issuing 750 billion rupiah bond issue with AAA rated. So I think this is a kind of de-risking mechanism that we introduce to the project at an operational level, because this is happen at the operational level, and the beauty of the bond issuance is used to refinance the existing facility, which is given during the greenfield. This is quite interesting project to the hydropower, because Indonesia is still rely heavily to the coal fire, since according to 2016 data, 2019 data, I think 44% of the capacity rely on coal. So any move away from the use of coal is very positive for Indonesia. The second facility is basically a greenfield facility. It's a project facility, project finance facility. This is basically a catalytic role that we play to collaborate with the commercial bank. In this particular case, we collaborate with UOB, whereby UOB provide a senior loan and we provide subordinated loan. So by the the existence of our facility, UOB should have a super senior, yeah, because we are subordinate, and this is a parallel finance that we provide on the project finance stage. So and now the project has already been in operation and it has been refinanced by Bank Mandiri. So but when the time we provided this facility, I think 3-4 years ago, I think the project is in the construction stage. Yeah. So I think those two examples, yeah, clearly demonstrate our role, yeah, as a catalytic role and providing de-risking mechanism. The uniqueness of this de-risking mechanism is basically we can complement to other financing, whether it is capital market or a commercial bank. I return to you.
Thank you, Pak Edwin, and hopefully that answered the question from the audience. And now I think the last one, which was for Sean. So the question was, I think, around winners and then eventually there are also losers from the transition. And in this case, the question was really about waste management. What happens when we're pushing for green? What happens to companies and businesses that are currently managing waste? What happens to their incomes once this revenue stream starts to go down? But I think it's equally relevant for any industry that's which will be affected by the transition. Any comments on that one, Sean, please?
Look, I think the key thing is the comment about the shape of the future that I made. This economy that we live in ASEAN is going to change very, very quickly, has to change because of movements in China, Europe, and the US and Japan, and because we need to respond to a growing crisis in the region. All of that means it will change. If you want to have a clue about what is going to change, look to the taxonomies. It'll give you a pool of investments that are less likely to be impacted by policy change, more likely to be the shape of the future. And frankly, everyone has to now be aware of what the future holds for their business, for their economy, if they're any kind of reasonable. Now, I'm not talking about shopkeepers in Bandung here. I'm talking about bigger businesses and banks and the like. But clearly, at any stage, it is the responsibility of the business owners and the directors to be charting a course for profitability in the future or returns for consumers, for citizens, if you're a city. Every organisation has to figure out what the future holds and plan for it. That applies to waste companies as much as anything. I'm not going to give you specific direction about how a waste company can remain profitable in the next 30 years. All I can say is things are changing. Prepare now, look to the future. I mean, of course, in waste, there will need to be less waste. We do need to continue to work on the plastics problem in Indonesia and get it down. In other words, we're not going to be collecting waste and disposing it. We're going to be stopping producing it and turning the plastics into organically based plastics that will decompose. That will change the nature of waste business. Of course it will. Landfill is expensive. It will start becoming much more expensive to dispose of waste. As we've seen in Western countries, plan for that, folk. Prepare. Start thinking about how other companies in richer countries have responded to that in the future. There are viable waste businesses in every country in the world, including in Luxembourg, for goodness sake. There's ways of doing this, but it does require all of us to be nimble and to be really looking to the future, not the past, for how these things are going to develop. Because we're in a period of really rapid change, and some of that change will come in a rush as we experience some of these really severe climate incidents that I'm afraid, I'm sorry, I feel apologetic because it's my generation's fault. It's Eugene generation's fault. It's Anuja's generation's fault that we haven't fixed this now. I'm sorry, it's going to be rough. It's going to be tough. And every time we have a crisis, we will then make a whole lot of changes in a hurry. But you can prepare. It is possible. I think it's the best way to put it for everyone. And that applies to the steel industry. That applies to the oil and gas sector. That applies to infrastructure development. It applies to roads. Have you thought about the adaptation issues as you're building roads around Malaysia, et cetera, et cetera, et cetera? We know a lot about the future now. I'm sorry to have to say, it is grim. There are a lot of rough things about it, but at least we know, we can predict. And for that, as a result, we can make a lot of decisions about the future in a way that we haven't been able to of previous generations. That is one thing I can share with you. I might leave it at that level, Naeeda, because otherwise I'm into the P&L of a company and the kind of capex it's got to pursue.
Thanks, John. No, thanks. Big thanks for that and for answering. That was also a hard question. So actually, there are more still coming through, but we are kind of out of time. So I'll just maybe highlight the last one. And anybody that wants to take it, please do. One of the questions was agriculture is key in our region. So what does it mean for green financing, and how do we penetrate the agriculture sector? I mean, I can maybe start off that answer, then ask anybody else who wants to come in. Firstly, I think it's we can't do green financing in Southeast Asia without looking at the agriculture sector. Not only is it a major source of emissions, but it's also critical to food security and any adaptation effort. So we can't look at green finance without it. There are some examples in the region, but I wonder if any of the panelists wants to jump in, keeping in mind we only really have another couple of minutes.
Well, I can jump in and say that agriculture is actually top of the list in the ASEAN taxonomy because it's like you say, Naeeda, it is the major emitter. So we will need to address agriculture and forestry as a priority.
Thanks for that, Eugene. Okay, so since you answered that really quickly, I will maybe ask a last question to the panelists, which is, we've talked about different things today, right? We talked about enabling policy regulation that greening the financial sector. We talked about taxonomies and their broader role. We talked about financing facilities, regional versus national action, pipeline development, green bonds. So if you had to pick an area to start, and I will not take the answer, we have to do everything all at once. If you will take one area that you would start with in the next 1 year in your area of expertise, okay, actually, no, not in your area of expertise, but across the financial sector, not the thing that you're working on. It's just getting a bit confusing, maybe. What would you go with? So let me ask AG Lynn, what would you go with? Not financial regulation. What else?
Yeah, Naeeda, actually, we're working on those elements along with the other financial sector regulators. But I guess, at least from a perspective of a supervisor, we would like to intensify or accelerate capacity building and awareness campaign. We all contribute to this goal of reducing carbon emissions and contributing to the global goal of the climate agreement. So I guess awareness, capacity building, as well as realizing what we could contribute, little steps at a time, would again redound to the benefit of globally.
Thanks, Eugene. Okay, one for capacity. Edwin, what would you go with? One thing. But you're on mute, Edwin, sorry.
I think it's a combination of capacity and I think the ability or the provision of the government support, for I think in many areas, the context of the government support is making ready of the project, and as well as I think providing feasibility or viability gap. I think that is from my perspective is very critical in Indonesia case. Yeah.
Thank you, Edwin. Okay, so that's 2 for capacity and 1 for government support for projects. What about Sean? What would you go with?
Oh, look, the question was so complicated, Naeeda. All I can think of is this answer in relation to agriculture as well as answer that. We need to tag everything that qualifies so that we know. We need to tag inputs into agriculture, green fertilizer, organic fertilizer, for example. We just kind of need to know. We don't know at the moment. We need to tag what happens to the farm. Resilience crops in the Mekong that might survive salination, example. We need to tag what storage and transport and food processing aspects are suitable for the future. We need to know. I'd like to wander around if a can of green paints around the streets of Kuala Lumpur. I'd like to paint things. This is a sustainable investment. On the basis, of course, everything that's not painted is not sustainable. We need to know. Everyone needs to know. And that's where the application of taxonomy work becomes really important. Then we can all act, right? Once we know, we can say, oh, okay, we just need to make sure we do more of that. We can need to get some incentives or whatever it might be, but we're just going to make it easy for everyone.
Thanks, Sean. Though I would warn against spraying stuff in cities, you might get arrested. So let's try not to do that. But yes, tag in virtually, that would be good. Okay, Eugene, and then finally, last but never least, Anush. And you're on mute, Eugene.
Sorry.
Also.
Yeah, I want to follow on from BSP's good work, which is trying to build capacity. But I think what we need to do is we need to build capacity through empowerment. So what we're lacking now is information, because we can tell people these are the things that you need to comply with. But if there's no information out there in a consistent, complete, and timely manner, we're not going to be able to execute this. So we need information. So I'm for capacity, but building capacity through empowerment and empowerment through information.
Okay, so tag everything, so capacity, but tag everything. Okay, get it. And then finally, Anush.
Thanks, Naeeda. Since the panel as a whole says that we should do everything, basically, my own sense is I would focus on city governments, because I think the non-E cities, especially, I think that's where a lot of awareness as well as projects need to be developed, because that's where I think the biggest issue is in terms of the biggest infrastructure, water, transport projects that are coming up. And I'd like that to become much more green and much more blended finance. So I would say biggest focus from my perspective would be to take B cities, B and C towns and cities, and try and twin them with cities where things have happened, and try to create green projects which are blended. And I think I'm sure Edwin is already working on that. So that's where I'd like to go.
Thank you, Anush. And now that we are literally out of time, I would like to end this session by saying a big, big thank you to our amazing panel and what has been a super exciting discussion that I've really enjoyed. So thank you very much, Lynn. Thank you, Edwin. Thank you, Sean. Thank you, Eugene. Thank you, Anush. And I know you guys, many of us meet each other on various panels, but this one has been really good today, really timely, and hopefully has given the audience some answers to get started on. Thanks very much and good afternoon.